welcome. You have tuned into Closing Trades right here on Nifty now. I'm Srishti Sharma and with me is Snehi Shah. And Snehi, seems like that the sort of a momentum that we have seen in the past couple of days in the market, that is seen to be fizzling out. But the big news that we are tracking for now is the tax that could be likely on EVs, because GOM has recommended raising the EV tax rate to 18% from 5% that was earlier, and that could be for the cars that are higher priced in the range of 20 to 40 lakhs. And that's the big news that we are gathering. Nifty 50 is down, but Nifty Auto, if we can pull up the chart of that particular index, we will have a clear picture, because the heavyweights like M&M and some of the other counters like Tata Motors, they must have been hammered in trade, and that's the sharp fall on the index front. But M&M, that is at the day's lowest point right now, because do remember, just this particular year itself, we have seen M&M EV launches happening. Both the cars are priced above 20 lakhs, and that could have a bigger hit. M&M's, though the penetration is on the lower end in terms of their overall portfolio contribution, but given the fact that they have more launches lined up in the times ahead, as they have also highlighted their Vision 2027, on the back of that, we are seeing M&M is the counter that is getting the most of the bashing right now. And similar is the case for Tata Motors. But for Tata Motors, do remember that majority of the cars do fall below that 20 lakh slab. But other than that, in some of the recent launches like Tata Safari, that was priced higher. And on the back of that, even Tata Motors is also feeling the heat right now. Even Tata Motors is down almost 1%. Maruti is one such company which might not have that much of an impact right now, given the fact that their e-Vitara was launched just a while back, while Indian markets are still awaiting that to see on the roads. But yes, Snehi, the big news that we are getting is on the tax, and it's the autos that is seen to be feeling the heat.
Oh, well, absolutely, Shrishti. And seems like this is the first sector to be feeling the heat, because the announcement so far, only we have clarity on the EV front right now. That also based on what we're understanding from agencies. But well, yes, all eyes are going to be on that GST meeting tomorrow, where the group of ministers are going to be mulling the final tax slabs. So that's 3rd and 4th September, tomorrow and day after, where we'll be hearing a whole host of more announcements along similar lines of slabs rejigs. What stands to gain, what stands to lose. There are some common expectations on the street, wherein we were expecting the overall auto pack other than EVs to benefit. Consumption was expected to be another beneficiary. So yes, some clarity will be received on that front over the course of the next 2 days. But other than that, once again shifting focus to the market right now, and we've seen a steep knock coming in from the day's high. Nifty currently holding above the 24,550 mark, but just barely above over there. A cut of about 0.3%, and a sharp fall from the day's high of that 24,750 mark. So well, almost a 200-point cut is what we've seen from the day's high. Sensex 0.3% lower. Nifty Bank seeing further pressure, 0.6% cut coming on this front. Just want to see what the broader market is doing. Still holding on to some gains is the Nifty Mid Cap Index. Small Cap also doing pretty well, still a 0.5% uptick coming in. But you know, we are talking about the auto space, and a lot of luxury players that have overseas origins, the likes of Mercedes-Benz and Tesla, they could stand to be affected in India. In fact, we interacted with Santosh Iyer, Managing Director and CEO of Mercedes-Benz India, and he shared that they welcome the GST rate rationalization step. Listen into what else he had to say.
We do close to 20,000 cars in India, but in the global scheme of things, we do 1.8, 1.9 million cars. So there is still a lot of runway to go. We saw August a bit muted, but when you look at inquiries, consumers wanting to buy cars, there is still a lot of pipeline. They are all waiting for the GST announcement. We could see a significant demand from the 22nd till 31st of October. We have also incidentally announcing our own retail, a festive campaign today. It's called the Dream Days. This campaign enables consumers to buy Mercedes-Benz cars at not only lower EMIs, but even deferred EMIs. So there are many new products, financial products that we are introducing this festive season for consumers to shift into their dream car as a Mercedes-Benz, be it a Merc or a Benz.
All right, so that's the take coming in from Santosh Iyer or Mercedes-Benz India. But with this, let's move on, and let's try to understand that what factors are at play for the markets and which are the pockets that you can look at. And for this, let me welcome Sunny Agrawal, Head of Research, Fundamental Desk, SBI Cap Securities, joining us on the show. Hi Sunny, good afternoon and good to be speaking with you. And Sunny, the recent news flow coming in on autos where the GOM has proposed hiking the tax to 28% for some of the cars that are priced over 40 lakhs, I believe, and specifically on the EVs. The EV tax rate is expected to go higher to 18%. M&M is believed to be one of those companies to be hit the hardest for now in the listed space. Sunny, what is your own sense on that, and do you have any number in terms of the penetration of EV in M&M's portfolio for now?
Yeah, good afternoon,
Good
everyone.
afternoon.
I think, first of all, the clarity on whether the EV tax on EV vehicle will it be increased for 20 lakh plus price band or 40 lakh plus price band? That is one of the key important metric to track as far as impact on M&M is concerned, because we have seen the recently B6 model with a pack 2 is coming at close to 21-22 lakhs. So in case the higher tax slab is applicable for a car above 40 lakh, I think most of the portfolio of M&M won't be impacted. Let's see, I think we should wait for a clarity before taking any actionable call on M&M or for that matter Mahindra and Mahindra. Coming to the penetration number, so I don't have readily available that number. Let me check with the team. Meanwhile, I will get back to you with that number.
Okay, and Sunny, well, that's the impact that we're seeing on auto when we're getting these first announcements, or rather little clarity coming in on this auto space. But shifting focus away from autos and talking about the overall market construct, it started off and as an optimistic day. In fact, we were at that 24,750 mark, and look at the nosedive we've seen from the day's high. Do you believe this is on the back of the expectations? Is the market already pricing in the fear, because this was supposed to be incrementally positive for us, the GST rate rationalization? Or do you believe that this is the first Tuesday expiry and that is all the action that is at play right now? What do you think has led to such a sharp nosedive in the Nifty? Yes, please.
Audible?
Yes, Sunny, please continue.
Yeah, sorry, I missed the question. So you are asking about why Nifty is under pressure, right?
If this is the fear that we're already seeing from these announcements coming in on the GST front, or is this just the expiry today, the Nifty expiry that is at play?
Yeah, I think Nifty expiry can also be one of the reasons for a volatility in our market. So we have seen shift from Thursday to Tuesday, and I think again the street is waiting for more clarity from a GST council meeting. One has to keep in mind that the announcement was made first on 15th of August, and post that we have already seen rally across most of the consumption name. So maybe some kind of profit taking is also visible, and at the same time. As most of the auto players are also alluding to that, because of this temporary gap of indecision of GST rationalization, there can be some dip in auto sales volume for the month of September. However, October can be a blockbuster month, as once the GST is rationalized, the demand will pick up during the period of Dussehra and Diwali. So there can be some a little bit dip in terms of volume for all the auto name, especially two-wheeler and passenger vehicle name. But having said that, I think long term is definitely positive in case there is a GST rationalized across most of the consumption basket. And recently, what we believe is that this is a good opportunity to accumulate some name across the consumer. So yesterday only we have released a list of 10 stocks for our client, where we believe there is a good opportunity to deploy the money. Just if you permit me, I can name all those 10 stocks for your viewers.
Sunny, please let us know.
Yeah, so again, what we believe among the jewelry space, the Titan is the one stock which where one can bet money on. We believe one of the indirect beneficiary of the GST rate cut can be an construction chemical name like Pidilite Industry. So for Pidilite, if you see last 3 years, we have seen a PAT has grown at close to 18-20% CAGR, but stock has not performed because of the expensive valuation. But I think we believe now time is right for Pidilite to start outperforming the other peers. Among the gold finance name, Muthoot Finance is the one stock which we have recommended. Swiggy Limited, again, play on new age business, food delivery, as well as quick commerce. MCX, again, play on rising silver and gold prices, wherein we believe the value of contract definitely gets expanded because of the increase in gold and silver prices, and volume is also increasing as far as option trading is concerned. Techno, electric and engineering, again, capex play on basically power, EPC, as well as data center and smart meter side. Travel food services, which we believe is a proxy play on rising air passenger traffic in India. Although of late we have seen some cool off in air passenger traffic, but what we believe is that travel food services, since the penetration in terms of number of brands, QSR brands, which they are opening in the various restaurant and the lounges, which they are expanding, they can continue to gain in terms of earning growth. Godavari Power and Ispat is the one stock which we have recommended amongst the metal and mining pack. Belra is the industry and Autoan's name, predominantly a proxy play on two-wheeler industry. So Belra is the one stock which we have recommended. And VST Tiller Tractors Limited, basically play on farm equipment side. So these are the all 10 stocks which we have recommended to our clients.
It's a long list to watch out for. Thanks so much, Sunny, for that. But yes, a lot of these counters are indeed in focus, and select PSU counters, they are actually having a good day today. Case in point being Power Grid, Coal India, NTPC. They are actually among the top gainers on the Nifty 50 side. And Sunny, after a while, we are seeing such good moves in select PSU pack, and add to that list is actually NMDC as well. Anything that you are picking up within this pack? Every individual counter that I just named have an individual news flow related to that, be it the production number or some of the sector data, but anything that is looking interesting to you.
I think Shrishti, Coal India looks very interesting from a risk-reward perspective. Basically, what I feel is that although we are seeing a kind of muted growth in terms of profitability, but a very favorable valuation, a very high dividend yield, and the recent number point to a slightly better than expected production and sales volume for Coal India. So Coal India is the one name which we feel offer a lot of value at a current market rate. And in addition to that, NTPC Limited, again, we continue to remain bullish on both renewable as well as thermal power capacity addition of India. And NTPC being a largest player again and holding company of NTPC Green, again trading at a very attractive valuation. So NTPC again offer a very favorable risk reward ratio at a current juncture. In addition to that, among the PSU pack, what I feel is that we have recently seen a strong downtrend in all the defense names. So Bharat Electronic Limited, after a recent correction, looks very attractive. So we believe the fair value of BEL Bharat Electronic is 450. However, in short term, it may consolidate for a while. But if somebody is a long term investor, I think it's a good opportunity to accumulate Bharat Electronic in the portfolio.
Okay, so BEL, NTPC, Coal India, some of the stocks that are looking good to Sunny. But the other basket of stocks that's seeing the actual sweet gains in today's trade is the sugar space. And we caught up with the management of Sri Renuka Sugar and Balrampur Chini. Remember now, the government has lifted curbs of the production of ethanol from all sources of sugar, syrup, molasses. And these stocks are soaring away in trade despite that cut that we've seen in the index today. You have Sri Renuka that's up about 12.5%. Balrampur also holding firm at 5% gain. So looking good for both of them. Let's revisit the conversation we had with their managements and their outlook going ahead.
As of last year also, there was actually no particular restriction on diversion of juice for making ethanol. But yes, definitely a welcome, clarification and ambiguity. But the main topic for us still remains, and I believe all sugar, I speak for all the sugar industry when I say this, but ethanol pricing is actually the point which is much more important and which needs to be declared sooner rather than later. So I think the inventory levels are pretty conservative. I think the government number is 5.5. I think that's under control. But now that there will be a bumper crop expected next year, we'll have to see how the diversion actually plays out. That will depend on definitely the ethanol pricing and sugar production. It seems, at least from Maharashtra and Karnataka,
they are now announcing it well in time that there will be no restrictions. So this actually reflects the confidence in the government, and hopefully it's going to be good for the sugar sector in the sense that the government might actually end up diverting more sugar towards ethanol. because sugar has got the right ecosystem in place. So sugar sector, I think it's good times for the sugar sector, hopefully. And if we go by what ISWA says, then the production is going to rebound big time, which is a fact. In fact, I was talking to our cane guys in Karnataka and Maharashtra, where our mills are. They also feel that anywhere between 15 to 18% increase compared to last year would be in the cane availability. That all goes well.
All right, so that's the take coming in on the sugar pact, and all these companies are having a sweet day today. But with these viewers, it's the beginning of the month that often marks the key financial activities, salary credit, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Behtar Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. And as a part of the campaign, we are observing 4th of every month as the monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. All right, but with this, viewers, it's time now to slip into a very short break. Don't go anywhere. Lots more to talk about on the other side. Welcome back to Closing Trades right here on ET Now, and let's take this discussion forward with Shivangi Sharda. She is with us on the show right now. And hi, Shivangi. Firstly, help us with your take on select sector, Shivangi, because just before that all-important meeting with respect to GST rate rationalization, we see that the consumption basket is yet again making decent moves, even in this volatile market as well. Shivangi, anything from the consumption pack that you are liking at this point?
Very good afternoon, Shrishti. Thank you for having me. So from the consumption pack, we've of course seen that a lot of momentum and action can be seen in most of the counters, including stocks like Colpal, Nestle, Marico, for that matter. So these stocks are looking quite positive. Of course, Colpal, specifically speaking, it has surpassed its 50 daily exponential moving average and is holding quite well above the previous, hurdle zones, making it a support. So role reversal can be seen here. From the last 4 sessions, volumes have been quite significant here, which is confirming the uptrend here and confirming the strength of the bulls here in the entire sector. So Colpal could be one of them for the next potential targets of 2,500 levels.
The preferred pick coming in and making it to Shivangi's radar. We also have Vinay Rajani joining us. And Vinay, hi afternoon. First, give us a sense of the market construct that we've seen today. We started on a very optimistic and a positive note. And until about 1 p.m. or so, even after that, we were doing slightly okay. Now, this dip that we've seen in the Nifty, is this just expiry pressure at play on the charts? Do you believe this is only the expiry pressure playing out, or are you seeing some weakness on the charts for the near term for the Nifty?
Yeah, good afternoon. So it looks like that a more of a expiry move, and the way broader markets have improved in last 2 trading session, the bias is on the positive side. No doubt we have seen some correction from the higher level. Nifty has given respect to the 50% retracement of the total fall, which we have seen 750 points fall was there from the high of 25,153 to 24,400. So Nifty has given respect to 50% retracement resistance, and there has been a resistance of 50 days EMA, which is also placed on 24,800. But stock specific, gradually we can see some stocks which were not performing previously now started doing well. Some recoveries there in many underperformed sectors and stocks. So I don't see much downside from here. If there could be some for the expiry, it might remain under pressure, but overall I see broader markets doing well from here, and I think a dip should be bought into. The recent low of 24,400 should act as a very strong base for the Nifty, and I think that will not break. So overall bias is on the positive side. Stock specific bullish action will continue, and we have to see some stronger sector and stocks to find the trading opportunities on the long side. So overall, I am bullish. 24,400 should not break on the downside. And for that today, yes, expiry session could remain under pressure, but overall broader markets are looking stronger from here.
All right, so the broader market, they look strong at this point in time, and one should continue to hold that bias towards the positive side. But yes, a lot of these metal counters are also making good moves today. Case in point being Nalco, and it was actually backed by some of the numbers as well. I beg your pardon, it was NMDC that did come out with its production and the sales data. Shivangi, just wanted to have a chart check on NMDC. It's a 4% uptick, and the stock is almost at the day's highest point. And off late, we haven't seen NMDC participating much. Do you believe the stock can even see higher levels from these?
So talking about NMDC, it has kind of oscillated in a band in the last 6 weeks, and we've seen that swings have been within this consolidated range. Of course, the stock is up more than 4% today, but again, we'll have to wait for it to sustain above 72 levels, which earlier, it failed to on 21st August. So if the stock holds above 72, then it could actually be ready for a range breakout and a fresh trade and a fresh leg of rally from here onwards towards 75 levels. But again, it needs to hold above 72 levels.
Okay, so that's the take on NMDC. Sunny, coming to you for your outlook on the entire IT space, has been underperforming for quite some time. But recently, over the last couple of trading sessions, IT seems to be finding its footing back. Now that it's showing a little bit of an upward trajectory, would you recommend a fresh buy in any of the IT names right now?
Yes, coming to IT, again, I feel that still there is not much clarity on demand environment, and September quarter can again be a muted quarter. Maybe second half of FY26 can be relatively better compared to first half in terms of growth for the entire IT pack. But yes, definitely most of the negatives are already in the price. So downside is limited in all the tier 1 as well as mid-size IT company. If I have to identify a few stocks which we feel can perform relatively better compared to peers, so we feel HCL Tech and Wipro amongst the tier 1 companies which can relatively outperform their peers. And among the mid-size name, Tata Technologies, Hexaware, Coforge, and Persistent. So these are the 4 names among the mid-size where one can accumulate gradually over the period of next 3 to 4 months, keeping in mind the investment horizon of at least 12 to 18 months.
Okay, Sunny, thanks for that take, and thanks so much for your time today. On that note, we'll let you go. Viewers, time to slip into a very short break. We'll keep the conversation going with Shivangi and Vinay on the other side to talk more about how the markets are expected to pan out for the last 30 minutes rather of trade. Hi there, welcome back to Closing Trades, and just taking stock of what the market is looking like with the last 30 minutes or so left of trade right now. 24,571. Meager recovery from the day's low, if you could even call it that. 0.2% cut still is something that we're seeing on the Nifty, but as you were highlighting earlier, it's actually the broader end of the market that is doing pretty well and is holding on to the gains. You still have names from the sugar space, from the tire space that are doing very well, and this fall that we've seen in Nifty right now has not affected these baskets of stocks as of now, at least yet. We also have Varun Goyal, Senior Fund Manager Equity at Mirae Asset Investment Managers, who's joining us on the show. And Varun, hi, good afternoon. Thanks for your time today. Now, of course, all eyes are going to be glued to that GST meeting tomorrow and day after. Give us a sense of what kind of announcements are you expecting? Largely, the market has, factored in what we can expect in terms of the rationalization. But on the basis of that, have you made any changes, or do you plan on making any changes to the portfolio?
Good afternoon. Thank you so much for having me on the show. I think broadly, it looks like for the year FY26, it should be a year of revival, cyclical revival in India's GDP growth. I think together with the significant monetary easing that we have seen, this consumption stimulus, first through 1 lakh crores of direct tax cuts, and hopefully the approach to reviving economic growth, both on the consumption side and hopefully, as the interest rates cuts get passed on to the system, even the capex and the real estate side can start doing well. So our sense is for the year as a whole, we should see earnings growth revival from around 3-4% last year to around 10-12% this year. And incrementally, sectors like auto, consumer durables, consumer staples, there is expectation that we should see a good festive season, and hopefully these companies can build on that growth momentum going forward.
Right, so select sectors to watch out for, be it autos and consumer discretionary. But Varun, the one of the sectors that nobody is really touching right now is actually the pharma space. Yes, that overhang with respect to tariff does remain, but if we look at the longer term picture, if we can pull up the charts of the last 3 months for select companies like Sun Pharma, Lupin, Dr. Reddy, Cipla, they are quite hammered in the past 3 months. I don't think that any of these large cap pharma majors have delivered anything on the return side. The earnings were not that bad, but what is lacking as a trigger with respect to pharma space, Varun? What are your thoughts, and when do you think that investors can once again find interest here?
No, we are constructive in the pharma space as a whole. I think while there is overhang of tariffs or fear that tariffs may get into place sometime during the course of this year, our sense is it will not be a very material roadblock for this sector. I think CDMO space is clearly a winner from a next 3 to 5 year perspective. We see several emerging opportunities coming up in that space. I think domestic formulations continue to be a very robust and secular story. I think hospitals and health insurance companies also continue to do well. So I think overall as a basket, the pharma and the healthcare space continues to be attractive, and our sense is from a slightly medium to long term perspective, the sector should continue to do well.
Okay, so that's the take on the pharma space. Shivangi, coming to you, any stocks that you would find value in the pharma space right now? They're looking good on the charts because, like Shrishti was highlighting, they've been in a lull for quite some time. So, any fresh buy on dip strategy if you're seeing that kind of value anywhere?
Now, of course, talking about the pharma space, these have been quite volatile in the last 4 weeks. And looking at the overall space, whatever little momentum was trying to build up hasn't been able to sustain at these levels. So I would actually wait and watch on this one. Contrary to this, auto space and auto ancillary space is quite positive, so one could focus there.
Okay, so that's the take coming in on some of the pharma stocks. Let's talk about some other sectors that are in focus today. Case in point being FMCG is doing very well. Top sectoral gainer today, names like Dabur are up 4%. United Brewery is doing well. Emami, Colgate that Shivangi was flagging off, Godrej Consumer, Nestle, all of them actually have already started showing some signs of that GST rationalization cheer. Of course, we'll be waiting for that clarity over the next 2 days. But any stocks from the FMCG space that are looking good, staples or otherwise?
Yeah, so definitely the entire sector is looking very strong on the charts, and in fact, it has been outperforming. The entire consumption theme has been working very fine, and there has been some positive news and developments also which can support this sector. So now I can see some strength building in the FMCG space as a positional charts looking quite strong. If I were to look at the ratio chart, if I compare FMCG with the Nifty, I see a good strength coming back to the FMCG sector, because in year 2025, FMCG has not performed that much. So we can expect some retracement of that, and FMCG as a theme can do very well. So not only the large cap stock like HUL, Godrej Consumer, Dabur, these are already looking good, but Pidilite is also looking strong. Some paint stocks are also performing well. So I see a broad-based rally in the FMCG space. Most of the stocks in this particular space are looking good and good to go long from here, and I see a good upside. So I'm taking a positional view. Anything can happen in next couple of sessions because of the GST announcements and all. But the overall chart patterns and ratio chart suggesting that there is a good upside available in the FMCG space. This consumption theme will play out, and auto is one of the part of consumption theme. Another theme is the FMCG, which can do well. So auto has already performed in anticipation of good announcements, and FMCG is yet to perform. And charts are suggesting very good upside, very healthy upside from current level. So definitely paint stocks, then the adhesive stocks, as well as the HUL and Godrej consumers of the world are looking very strong on the charts.
All right, that's the take on the FMCG pack. But the big news that we have been tracking with respect to the auto space is that the GOM eyes higher GST of 18% for 20 to 40 lakhs priced EVs. And let's get in more details on this one. And for this, my colleague Prakash Priyadarshi is here with us. Prakash, over to you.
Yes, GST, GOM on rate rationalization has made a proposal to hike GST on high-end cars, primarily priced between 20 lakh to 40 lakh, from 5% to 18%. This recommendation is part of the proposals made by the GOM, which comprises state governments, right? But the significant part is that this is not part of the central's proposal, which has been made to the GOM. Sources are indicating that the central government has not recommended a hike in GST on EV cars. In fact, hike in GST on EV cars is not part of the central government's proposal, which primarily endorses for two rated structure, essentially 5% and 18%. Along with that, sources are also indicating that the proposal is not part of the agenda for the next GST Council meeting, which is scheduled on September 3 and 4. And this is unlikely to be approved by the GST Council. Of course, the GST Council has to take the final call in any such proposal, but the sources are indicating that any such recommendations have not been made by the central government to the GST GOM, and therefore it is unlikely that the GST Council is going to take any such call in the next GST Council meeting. Back to you.
Prakash, thanks for taking us through all of those details and providing some clarity on what we're hearing from agencies. And like you mentioned, all eyes are going to be on the final verdict coming in from the group of ministers either tomorrow or day after. So on the back of this news flow, as of now, you have some auto stocks with EV exposure in their portfolio that are tanking in trade. You have M&M that's lower by 2.5%. Tata Motors also feeling the heat slightly. 0.8% cut is what we're seeing on Tata Motors. But while that is on autos, and autos are feeling the heat right now, auto anchs are doing pretty well. And one particular auto anch segment, that's tires. Tire stocks are buzzing away in trade after auto majors reported better than estimated sales in the month gone by, and also some more factors at play. My colleague Kanishka Sarkar is here with more details on what has led to this rally in names like CEAT, JK Tires, Apollo Tires. Kanishka, over to you.
Well, tire stocks are on fire in today's trading session. Well, let's take a look at 6 key reasons why they are trading in fast lane. First up, August auto sales have come in better than expected, and that's the reason why these stocks are in focus. Data from the rubber board suggests that CEAT, Apollo Tires and JK Tire, their sales rose up to 4% year on year in the month gone by. Meanwhile, MRF saw a 2% uptick, whereas Balkrishna Industries, they saw a 1% uptick, and that's the reason why these stocks are in focus. Second reason, of course, that raw material prices are stable, with natural rubber price that is also seeing a downward trend, and that's the reason. The third one, of course, is that there is a festive push also, due to which replacement demand that is expected to pick up. Other than that, export demand could also see a revival once tariff clarity emerges in terms of US tariffs that have been imposed in India. On the corporate side, CEAT has completed a key global acquisition on the OHT segment. And that's the reason why CEAT is rallying in trade today. And lastly, we're also seeing some DIY buying in some counters, and hence all of these tire stocks are in the fast lane today.
All right, thank you so much, Kanishka, for highlighting all the factors that are at play for the tire counters. But Vinay, seems like no stopping for all these tire counters. Anything that is looking attractive to you on charts?
So CEAT is looking quite strong today. It has recently surpassed the 200 days average and 50 days exponential average. So looking stronger and good liquidity is also there. So currently stock is trading around 33.77. So today's low become the strong support, which is around 32.20. So positionally that can be kept as a stop loss, and we can expect some more upside in this counter. So CEAT looks quite strong on the charts.
That's the take on some of the tire stocks in today's trading session. But Varun, what's your take on two counters, or two themes rather, that have been seeing some uptick right now, and that's the entire defense and railway counters. Both of them are seeing some good moves in trade today. How are you positioned when it comes to these sectors?
I think as far as defense is concerned, it's a secular theme. We believe a lot of exports will happen out of India. And of course, from a domestic requirement perspective, we have seen significant requirement from a upgradation of India's defense capabilities. So from our next 5 to 10 years, we see a very strong revenue pipeline for most OEMs. And of course, there is a big ecosystem of vendors which is getting developed on both public and private side. So as a theme, the sector is pretty attractive. Of course, valuations are a challenge. We believe that the large cap space is better placed from a valuation point of view as compared to the small and mid cap space, where the valuation seems to be pretty steep.
All right, that's the take on select counters. But just a few minutes left before we shut shop. And yes, we are sub that 24,600 mark for Nifty 50, while Nifty Bank has tanked over 300 points right now. But Varun, how do you play financial as a theme right now? Because for now, off late, the focus is clearly on some of the sectors that will be the biggest beneficiary if that GST rate rationalization takes place. But financials, that remains to be the core theme and the major driver of what really in terms of the finances and loans will happen. But the other fact of the matter is, in a rate cut cycle, the NIMs are expected to go down. So how should one place their bets within the financial space right now? Should it be smaller players within the MSMEs? What are your thoughts?
Well, our sense is once the rate cuts that have already been carried out, once they get fully passed on in the next few months, the credit growth for the system as a whole should increase from around 10% to 12%. I think in a scenario where the system as a whole is seeing 12% growth, tier one banks, both public and private, should be able to see 14-15% kind of a growth. And we remain constructive on that side. I think as far as the banking system is concerned, the pressure on NIMs will stay for one more quarter. And from the third quarter onwards, our sense is NIMs will start getting better. And by the fourth quarter, by the exit of this financial year, we believe NIMs will go back to the levels they were on the exit of FY25. So broadly, I think we should see a reversal and strength coming back to NIMs by the end of the year. As of now, of course, we believe NBFCs should benefit because they're able to pass on interest rate hikes a lot faster. So in this environment, we expect auto NBFCs, consumer durable NBFCs to do well. And hopefully, from the third quarter onwards, we should see even the banks delivering very strong numbers. We remain quite constructive on the banking space as a whole, both on NBFC as well as on the banking side.
Okay, so positive outlook coming in on the entire banking and financial space from Varun. But when I coming to you, the way the Nifty has fallen right now, any buying opportunities if you're seeing on the markets right now, where would you be placing your BTST bets?
As you have been mentioning that some of the railway stocks and defense stocks have performed well. So one of the stock which is having exposure in both this segment is the PEML Bharat Earth Mover, which is looking quite strong. So around 40701 can go long. I would suggest a positional stop loss for 1 week 3840. On the upside, I'm expecting a target around 4280 to 4300. So this should be the target. And the another space in which I can see some strength coming back is the small PSU bank stocks. One of the stock is IOB, Indian Overseas Bank. This is a nice formation on the chart and a nice reversal I can see on the chart. So IOB around 3981 can go long. 38 should be the stop loss for 1 week. And on the upside, I'm expecting a target of 4280. So these are not the pure BTST ideas, but for at least 1 week, we can take a view on this.
All right, so those are the buy calls that are coming in from Vinay. Let's watch out for that. But Varun, what are your sector preferences right now, barring the discretionary side? Because yes, the excitement is there, but anything apart from that, where do you believe that the excitement can be on? Because of late, select IT counters, select power counters, they are showing good moves.
Well, we believe FY26 is the year of India's cyclical recovery, and as such, we are more focused on domestic economy-facing sectors. We expect banking, as a whole, both banks and NBFCs, auto, consumer discretionary, FMCG, real estate, and select capex stories to do well. So broadly, our focus of the preferred sectors are more inward-facing sectors, and we believe that the growth should be pretty strong. We've seen Q1 growth numbers were quite good. And once the full benefit of rate cuts and the tax cuts are passed on, I think this growth momentum should continue to remain quite constructive on the domestic facing sectors.
Okay, so that's the take coming in. But Varun, what's your take on the entire insurance space? Today, some of the life insurance stocks are doing well, but even overall, the street is expecting that the GST Council, they might waive off the GST on insurance premiums. If that does happen, Varun, do you believe this insurance sector could look even more attractive, or to you right now, is it looking attractive at all?
Yeah, so I mean, from a taxation point of view, we'll come to know in a couple of days. But I think even other than that, we believe the insurance penetration in the country is only increasing. We're more excited about the general insurance, especially the health insurance space. That's where we see significant increase in penetration, and that story should continue. And as the auto sector kind of revives, even the auto insurance space should do quite well. So our preference would be more to the general insurance space than the life insurance space. But overall, we expect the insurance sector to continue to do well.
Overall, expect the insurance space to do well, but before we shut shop, the markets for today, they are off the day's highest points. And the picture that we are getting to see from the international markets for now, that is also not turning out to be that great, because the European markets are down, and so is the Dow Jones futures as well. The last time I checked was down over 200 points. And yes, today, we might hear from President Donald Trump as well, as he's gearing up to make some interesting announcements. Only he knows what he's going to say. But what are the markets telling you? Because we are sub that 24,600 mark for tomorrow. Where do you see the markets opening, and what sort of a bias can we have on the markets?
Yeah, so bias is on the positive side. The reason behind is that 92% of the index future positions carried by FIs are on the short side. So definitely this is an extreme number, which is the highest short position since March 2023. So in this case, even if we get the negative news, the downside will be limited. Or any positive news comes out, then a sharp short covering by the FIs in the index future will come, which will push the index on the upside. So I am a bit positive. As of now, we should not compare Indian equity markets with the global markets, because correlation has not been that positive. And in 2025, we have already underperformed a lot compared to the emerging markets and developed markets. So we may altogether react differently. And I see some strength coming back to the markets, and some sentiment is getting changed. So I am a bit positive on the markets. I'm expecting that soon, once we see Nifty crossing about 24,800, then we will see a sharp short covering, which can take it up to 25,500 also. So that is a conditional call, but waiting for that to happen. 24,800 is a very strong resistance, and I'm waiting for that to surpass on the upside.
Okay, so that's the take coming in on where the market could be headed. But Varun, coming to you for a final question before we start winding down for the day. How are you positioned, if at all you are, when it comes to some of the white goods? Case in point being Voltas, Blue Star, PG Electroplus, because, on one hand, we've had that monsoon spoiler coming in for their Q1. On the other side, the GST rate rationalization, if all goes as expected, is expected to give a very big boost to some of these white good companies. How would you approach this sector at the time being?
If you look at the medium-term prospects, definitely very promising. Of course, per capita incomes, as they're increasing, will make a lot of these products more affordable. And if you look at all the stimulus measures, income tax cuts, hopefully GST tax cuts, and then the year down the line, we will also have the next pay commission. And while the benefit of that might be 1 year away, but broadly from the next 18 to 24 months point of view, we expect a significant revival as far as durable demand is concerned. So broadly, we would be constructive on the space from the next 2 year perspective.
So that's the take coming in on the white good counters for now. But yes, select counters continue to do well. The consumer discretionary, the autos, select metal counters, that's where the excitement is indeed. But Vinay, before we shut shop, just your take on select companies and select counters specifically within the railway pack, because RITES, IRCON, they are actually doing pretty well. Anything in particular you wish to highlight when it comes to RITE and IRCON in particular?
Yeah, so RITES actually gave yesterday there was a breakout, and we recommended to our clients clients today. We have booked profit in trading position, but the way things are shaping out, I think the entire railway space can extend the pullback. So I'm expecting broad-based rally in the railway pack also. So not only RITES, but RVNL, then IRFC, these stocks are also looking strong. So I am expecting 4 to 5% more upside in these stocks. So yes, in the coming days, we can expect extension of the pullback in all the counters in the railway space.
That's a take on some of the railway counters. On that note, Vinay, Varun, thank you so much for your time and thanks for speaking to us today. Let's start winding down for the day. A couple of minutes left for trade, and let's see where the Nifty is edging towards at the day's close, 24,576. Very slight recovery from the day's low, but a steep fall from the day's high coming in for the Nifty, 0.2% lower in the red, when at one point we were almost 7 to 0.8% in the green. On the flip side, sensex, two steep cuts coming in, 0.2% drop coming in on the spot basis. You have the advance decline ratio that is still in the favor of the advances, but more stocks have slipped towards the declines, and that is what is maybe causing the pressure on the markets today. You have sensex, like we were highlighting earlier, Nifty Bank, 0.6% drop on that front as well. What is looking good and still holding on to gains is the entire broader market group of stocks. So mid cap is up 0.2%. You also have Nifty small cap that's outperforming the entire breadth of the market, up more than 0.5%. So good moves coming in across the broader market for the second day in the row. From the Nifty 50 group of stocks, gains for Tata Consumer, Power Grid, Nestle, NTPC. So it's actually these power utilities as well as FMCG stocks that are doing very well. Joining that is metal, Tata Steel doing good, Hero Moto, Aisha from the auto space also doing very well. And of course, a few minutes ago, we had that news coming in wherein the GST rates on EV, we did see some numbers on that front. We'll get some clarity over the next 2 days. But on the back of that, you had M&M and Tata Motors that took a little bit of a hit in today's trade. M&M being the top Nifty loser, followed by Dr. Reddy's, ICICI Bank, Kotak, Cipla, Asian Paints and Tata Motors. On the flip side, if you take a look at sectoral gainers and losers, while FMCG topped the list, that was followed by energy, metal, realty and PSU banks. Everything else has closed in the red. You have Nifty Bank, Pharma, Auto and IT that are going to be or that are slated to close in the red in about a minute or so. If you talk about the top gainers today, of course, sugar, the top gainer in today's trade with names like Sri Renuka Sugars up almost 13%. You had Balrampur Chini, EID Perry, all of them did very well. You had tire stocks like Seat, JK Tires, Apollo Tires also in the fast lane today. Good moves coming on that front, joined by railway names like Rail Vikas, IRCTC, RVNL, all of them doing very well in today's trading session. Defense names also like Cochin Shipyard have done well today, so that is looking good. On the flip side, some pressure being built on Godfrey Phillips. Remember, this cigarette maker could be classified into the sin good and fall into the 40% GST category. At least that is the speculation for now. So 5% cut ahead of that crucial meeting tomorrow. And you also have names like GNFC, Lemon Tree, Industars, Tube Investment, UPL that have closed in the red. So, well, lots of stock to watch out for, and lots of action is what we've seen on either ends of the market today. And Shrishti, the biggest trigger is going to be the GST meeting to watch out for tomorrow and day after. Let's see what that holds for our markets tomorrow. But on that note, we'll wrap it up on this edition of Closing Trades. From Shrishti, me and the team that put this show together, thanks so much for tuning in.